Let's talk to Anthony de Paola, who joins us now, Bloomberg's Middle East energy markets reporter, who is in Dubai. Anthony, talk us through how this is having an impact on oil markets. We see increasingly weakness in the oil price. Some of the detail that we're getting on this US plan, perhaps coming to the fore.
Good morning. The price has gone down below that ever important level of $100 a barrel this week, really, and there's been a lot of talk in the market about the jawboning from the U.S. government that trying to talk the oil price down with this good news. So we came into the week concerned that there was going to be reciprocal attacks on energy facilities like power plants, like desalination facilities, which would have been kind of one of the worst case scenarios in terms of escalation of attacks. We didn't see that. Instead, we saw this 5-day reprieve, which then has now turned into this 15-point plan and ongoing talks. We are hearing that there are some other talks going to come up potentially in person later in the week, possibly in a third country, possibly also involving the vice president and secretary of state. So these are kind of indications that this may be getting a little bit more serious, that some of the participants that are joining the group adding some weight and some heft to that. So the market is taking these as good signs, and that's what's driving the price down a little bit below that important level of $100 a barrel. At the same time, on the physical side of the market, we have Hormuz blocked. We don't have oil flowing through there. Iran is letting a trickle of cargoes go through that they choose, tankers to China, a few to India, and they're even charging some money for those cargoes to go through.
Exactly. Surely it's that really matters here. President Trump can propose what he likes to Iran. Yes, AP can be reporting that Tehran has received this proposal, Anthony, but who knows whether Iran's going to accept it? And we know that the president, in the art of the deal, likes to start with big demands, and then what we end up with could be something very different. Surely what we need to be focused on when it comes to the oil price is just how long the Gulf energy industry is going to take to recover from the Iran war and how long it's going to take for the Strait to reopen.
Yeah, clearly, what we need to see is some real actual progress in terms of reaching an agreement and in terms of getting that open. But as we're seeing in the oil market, people will look for the news that they want to see that's positive and latch onto that. For example, where I'm sitting here in Dubai, we've had a few more quiet days in terms of missile interceptions and noises that you can hear in the sky. The numbers of drones and missiles have gone down. And so people are looking at that as a good sign, saying, well, maybe they really are talking. We're feeling it on the ground here, that it seems like there's a little bit less of activity. But we're not out of it until we're out of it. So there needs to be these discussions that lead to a full reopening of Hormuz, meaning all vessels can go through, not just a select few and not paying tolls. That would not equate the free flow of energy supplies. And plus, the longer this goes on, we have the risk that it takes longer for facilities to ramp back up. Oil fields will need time to increase production. We've had producers shut in fields here because there hasn't been enough storage. There's simply nowhere to put the oil that they pump out of the ground. And a lot of the refineries as well that turn that oil into gasoline, diesel, jet fuel, those are export-oriented refineries. So even the refineries have had to slow their operational levels because they've got too much oil coming out. So what we really need to see is that vital waterway open up that allows the crude to flow and gives time for those facilities to come back online and gives time for tankers to get back to this region to lift that oil and get it out of this region.